Well, joining me now is Geoff Lewis. He's head of investment services at JPMorgan Asset Management. Very good day to you, Geoff. First up, what do you think went wrong?
Well, I wouldn't like to comment on the technical glitch, but I think the markets have been ripe for a moderate correction for some time. The technical analysts that I look at, they've been looking at things like advanced decline at market breadth, internal distribution, and so on. And short term, the market's been looking overbought, and now you have these factors like Greece, like the euro peripheral sovereign debt crisis, and now a technical glitch, plus the worries ongoing about China's monetary policy. So I think there have been enough catalysts now to actually trigger this market correction that the technical analysts have been warning us about now for at least some 3 or 4 weeks.
Does the correction, as you're putting it, continue? Are you concerned here?
Well, I think at this point in time, yes, there is obviously concern about the rather, the lack of finesse, say, of the European leaders in handling the Greek debt problem. But I think they have at least got a package together now, and once the money starts to flow to Greece within a couple of weeks' time, then investors may take a slightly longer-term view of the thing, because after all, Greece now doesn't have to go back to the market for the next 18 months, 2 years. So I think this is going to be a normal correction. I don't think it's a major inflection point or reversal of markets. We've had the big recovery after the lows. We're now in the kind of sideways, volatile era that one gets after a big, deep recession.
So what do you do here in terms of getting back into this, into the equity market at least?
Well, I would think on further correction, then this probably is a buying point to increase one's allocation to equities. After all, looking at things like political uncertainty in the UK, the ecological disaster in the Gulf with the oil spill, these are very much short-term concerns. The US economy is into a sustainable recovery. It's onto a pretty firm 3 to 4% GDP growth trend. Nothing's going to change that. The emerging markets are very strong. Many of them back up at potential output. These factors are not shaken by that. So it's too soon to call an end to the recovery in the global economy,
Geoff?
and also to the stock markets.
Geoff, great of you to join us. Geoff Lewis there from JPMorgan Asset Management.